All right, testing, testing, 1, 2, 3. All right. Hey, good morning. Look for a second there like it wasn't going to work, so glad it worked. Hey, good morning. It's Monday. How you doing? Mm-mm-mm. Welcome to today's webinar. I am super excited. Let's look at dollar pairs. Let's look at yen pairs. Maybe even look at Swissy pairs. Let's look at gold. Let's look at oil. We'll look at the calendar. Tons of awesome things going on. So without further ado, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com, and I'm here with the overriding goal of helping you become a success as a currency trader using both technical and fundamental analysis. And as a senior trader, and I don't mean as a senior citizen, but as someone who has been trading for 15 years, I can also address things like trader psychology and whatnot. Do these sessions 7:30 in the morning, Monday through Friday here at Forex.today. Why? It's approximately London lunch, and it's a couple hours before the New York stock market opens, so it's a great time to get together as a community of Forex traders here at Forex.today. Oh, good to see you. Let's get going. La, 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 la. Where is my show screen? So there's already people saying, hey, who wants to buy a dollar? Hey, who wants to sell a dollar? All right, cool. So let's take a look. Please confirm you see the pretty colors. Oh, some of you are using that old browser. Hang on. There you go. Anyone confirm? So sometime for some people, when I'm playing music and then I start the webinar, it, their music keeps playing. Meanwhile, for everyone else, the music obviously stops. So what browser keeps playing music? Mozilla. All right. Firefox, probably the same thing. Yeah. All right. Cool. Amazing though that you're not using Google Chrome or Microsoft Internet Explorer. Yeah. So, anyways, all right. So these are dollar pairs. Let's just start with them. Ah, yeah, I don't. I guess, Roger. Right. Anyways, let's start in well. Let's do the relative strength exercise. Dollar is stronger than Kiwi. Dollar is weaker than euro. Dollar is neutral against Aussie here. How would you classify that? I'm thinking it's a double top with a little high, so maybe it rolls down, but technically it's above the 21. Neutral? Yeah, I don't even know. I don't know how to call that. It's not stronger, it's not weaker. Um, okay, so I guess neutral. Swiss franc is stronger than the US dollar. Yen is weaker than the US dollar. And CAD, I suppose, stronger. So do we have something consistent here? Sure, Barry, I'm happy to do that for you. Do we have any consistency or congruency, so to speak? Start with the numerators. these should all be going up if the dollar is weak, or they should all be going down if the dollar is strong. This is going down, this is going up, and this is kind of sideways. Okay. This is definitely going down. Let's double check this up. But this is definitely going up, and this is definitely going down-ish, but 55 is in control. So what's our takeaway? Kiwi was weak. Euro is strong. Swissy is strong. Yen is weak. So right? So you could do like a euro yen, or you could long, or euro dollar long. Cool, right? Stone says typically risk on. This doesn't look that risk on, not using this analysis. But you could do Kiwi Swissy short. Okay. Kiwi dollar short. Got to be something stronger than dollar. Anyways, let's then take a look at yen pairs. Let's change the temp. La 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 la. Guess I should have just used the other one, but anyways. Okay. What do you think? We know yen is weak, and we know kiwi is weak. Right? Look at this. It's beautiful, right? We knew that by looking at Kiwi dollar, and we looked at dollar yen, and we could surmise what was happening here. Does anyone want to be a bull on Kiwi yen? No? No? All right, too bad. If you were, you're at a buy zone. Right? So you would sit and you would plan this out. So let me get my drawing tool. So, for example, could you use that as evidence of support in this market? Okay. And then your weekly swing would be this way. And you would want it somewhere in this area. So it seems pretty reasonable. I mean, you could do something if you were a bull, right? So like if today you saw it triple bottom and sort of start to work its way up, you could do it. If you're bullish, you could certainly do that. It's the right price. You got enough information there to put together a trade plan. Okay. Somebody wanted Aussie yen. Okay. You guys want to break this down? Okay. Where should the entry be? If you're a bull, where should the entry be? You should be in here. Right? We talked about it here. If it fell to this zone, as a bull, you need to put together a trade plan based on the bears getting out. Okay. The second part of that is the breakout, pullback into the role reversal. There's your hammock, right? This is definitely support going on down here. Okay. So that generally should be your plan. If you're just starting these things, up here, you are late. Okay. Okay. So now what? Okay. So describe to me as a bull how to trade this now. Did you get a weekly swing? Barry, we'll get there. No, swing traders will know that it opened out of position. So the plan of attack, there's two pieces of information that you glean from this chart. One is it's bullish and you're using the 21 EMA as a dynamic level of support. And then the second part will be, we'll probably get there quickly and we'll probably want it to come back. Okay. All right, so let's back out here. Okay, what are we going to do as a bear? Is it a good sell zone right now? You certainly have permission here. You certainly have permission here. That's using this top, right? That's using this shoulder and that shoulder, and this is basically a shoulder, but they're also monthly pivots. Okay. What about smaller time frames? Let's dive into here. What about the weekly? Where are we supposed to be short weekly if we're bear on the weekly swing? Yeah, we're already past that. So are these the market conditions that bears are dreaming of? Probably not. What they're going to want to see is, monthly pivots, weekly pivots, psych levels, fib levels, blah, 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 blah. So what it seems to me, if I was a bear, I'd be thinking, this 83.50 area would be perfect. That's what I would really be hoping for. somewhere in there. Okay. To give you will the picture. Okay. You see how hot this has been all week since hitting the target? Opened out of position, opened out of position. This was a good one today. Okay. So in a situation like this, you're supposed to use the 21 as your entry. In a situation like this, you're supposed to use the 21 as your entry. And then this opened on Monday in the buy zone. And this is the target. We've almost hit it, but our analysis of the higher time frames is it probably should continue. Anyways. So R2 is up here at 83. So it kind of feels like 83 first and then maybe down and then 83.50 and then a collapse. Okay. Does that make sense or do you have questions? Oh yeah, monthly, but it doesn't have to happen today, right, Guy? So right now, all we have is the 83.50 being, it seemed to me when I looked at the chart or the previous chart, 83.00 didn't seem to be that important. It looked like you wanted to rise a little bit up into like a monthly pivot. And then above that was the weekly target. And so it kind of looked like it wanted to stretch its neck up and then come back down and drop before it made any bigger rise. So I really don't know. This 83 doesn't seem quite enough. 83.50 seems like more than enough. And after that, I have the don't quite have enough confidence to say it's going to go to 85, so it'd be like a take profit area for me, right? And remember, over the last several weeks, we talked about lining up your expectations with market conditions, know when to hold them, know when to fold them, right? In this case, yeah, it's going up. I may want it to be going up. That's great, but I'm not certain it's going to go up. So take the profit if you can. So even though it's going up, the easiest one is the swing. Okay. The easiest one is the swing and letting it run. Everything else is trickier. It's opening overbought and all that kind of stuff. Well, you should have bought it at support. You didn't like it at support, right? Ooh, well, it's been falling. Well, now that it's at support and you're buying it overbought, to me, that's more frightening. So I'd rather have just bought it at the support. And then you say, well, Wayne, how did you know it was going up? I'm like, I didn't know it was going up, but if I'm a bull, I'm assuming it's going up. So I'm looking for levels of support. That's clearly a level of support. So you put together a trade plan and you see consolidation, higher high, higher low, so you buy it. Now it's gone up for 4 days straight. Yeah, isn't that what happens when you buy it at support? Right? It's not that I know, it's just you have to find your levels and you have to have made the decision before you get to the levels, and that's called a trade plan. After that, it's just managing risk. Was it full body, Hassan? Yeah. Yeah. All right. Just for fun, let's look at CAD. Did you have a talk with yourself, guys, over the weekend about like pivot points, for example? Like printing out this chart would have been a great idea. And you have to fully commit. Like, do professional traders use weekly pivot points? That'd be a question. And then you should write something down. What if you were it? What if I made you write an essay on weekly pivot points? Like this, if you're a swing trader, like that's the perfect place to sell, and this is your target. And if you get there early in the week, it's supposed to counter trend from there. The real, you can only expect it to go here, but just amazing coincidence that it hit up there and stopped, huh? And that that it's even playing off the monthlies in here. To me, it's all very fascinating, very, very fascinating. And if you're not fascinated with it, why not? I looked into that, Jacques, and it seems that not Google, YouTube has some uploading errors. So I upload it, and then it processes, and it's processing as I normally process it. And then like 9 hours later, it just goes, and I didn't know. So yes, I did do a webinar on Friday, and you should be, if not now, it should be soon on the Forex.today website. Okay. So anyways, I'll look into it, Jacques, to find out why there's so many. There's been quite a few, like probably 6 or 7 uploading errors that YouTube has had. So I'll double check. Okay. But you could probably count on one hand how many webinars I've missed in the last 5 years. So it kind of goes without saying, I don't miss webinars. Now, sometimes things happen, but I generally don't miss webinars. Well, Sharks is also missing from Forex. Well, that would be one and the same. I can't put a YouTube video on Forex.today if YouTube has an upload failure. Right, so yeah. So I guess what I'm trying to say to you guys is you should, if fascination is not the right word, just fall in love, like trick yourself if you have to, right? Take a love pill and stare at pivot point charts and just, because I think if you're fascinated or inquisitive, if you see, I think what most people do is they log in and they listen to the webinars and they like it, and that's that, and it's interesting, and you're kind of surrounded by good trading um, habits, I suppose. But most people, I think, take the slowest way possible of making my trading habits your trading habits, right? Then the next, because you just watch, it's like watching TV and becoming a better cook. Okay, if you just watch TV, maybe you should practice cooking. Right? Then the next kind of level is some people take notes and stuff like that, right? So, like, what I would do if I were me in your situation, um, you know, I would. I don't know if there's books on pivot points on Amazon or whatever, but let's say there were. I'd just buy them all, and I'd have a stack and like yay high. Yeah, but I would grab onto it like a pit bull or grabs onto your leg, you know. I'd be I'd be on these pivot points. I'd be totally fascinated by them. So, anyways, um, yeah, just yeah, get into it, man. Just get into it. Fall in love. I think as soon as you fall in love with trading, it takes you to the next step, whatever that next step is. Um, no, it doesn't have to, Jacques. Okay, those step ups are clues. They're part of your analysis. Okay, but remember, it doesn't necessarily suggest or predict anything. It just is. Okay, so try to get away. Everyone should pay attention to this one. You should get away from the this means this and that means that mentality. Your charts are not telling you information, right? So you need to look at all these colors on our screens and stuff and say, well, I'm a buyer based on whatever is your basis for wanting to buy or sell. And then you're using all these funny little lines and squiggly little things to just discern your buying points or your selling points, right? But I wouldn't look for step ups and pivot points and say I should be a bull because it's stepped up. What you're ignoring is, well, where's the resistance, and the resistance will kill all these things, or what news event is coming up, or what change in policy is happening. So you may not have been saying that, but want I still want to to say what I said. Just be careful. Okay. Okay, we did all that. So let's go to the typical standard setup. Guy wants to know the inner workings of oil. I studied the last 200 years of the oil industry. Um, so there are two books you need to read. They're at least 1,000 pages each. Um, and what is that guy's name? Um, there's only one guy. There's only one guy. If you want to take a class on oil, so I learned from a PhD, an Oxford PhD, and she happened to be Russian. It was good. Hang on. Okay. I could only find one in short order. Uh, this one's called The Prize by Daniel Yergin, and the other one is called The Quest by Daniel Yergin. Okay. You see that, Guy? It's a little thick. There's lots of words. There's no coloring in the middle. Okay. So imagine this now, Guy. You ready? You buy this one, you buy the other one, which is just as long. I mean, check that out. Like, it's ridiculous, right? Almost no pictures. There's a few, but almost none. So you read this one, it's 1,000 pages, okay? And then you read the other one, which is 1,000 pages. Now, here's the challenge, okay? Read them both within a 16-week period, but you also have to write 13 papers that are 6 to 10 pages each in that 16-week period. You also have to attend 32 hours of lecture. And all of a sudden you're like, I remember taking the class, I'm like, this class is stupid. You can't do that much work. And by the way, Guy, on top of that, you have to take another class at the same time. So I'm like, you can't possibly do that much work. You just can't do that much work. It's retarded. I got an A, by the way. Yeah. But it was retarded. It was so much work. But you know, like I said, I learned about the oil industry from a Russian woman with a PhD from Oxford while I was studying at Harvard. I'm like, okay, not bad. Nice story. So I learned a few things about oil. Plus, I'm Canadian. No, Daniels. I didn't learn from Daniel Yergin. But anyway, so like, if you once you read his stuff, if there's any oil situation, right, going on, like I haven't seen them yet, but like this issue with sanctions being applied to Iran again and having their oil supply cut off, you're going to see Daniel Yergin on TV. You're just going to see him somewhere. Okay. No, Yergin's not a woman, but Mr. is a lady on the Fed, you know, Mr. Mr.'s a lady. I think that's pretty funny. Okay, Kevin says, if I read the books, will I understand why the oil inventories are often wrong? What do you mean wrong? Like there's a conspiracy or something? Oh, versus the predictions. I don't know if that matters as much, but you know, when we discuss things like the EIA and the IEA and OPEC, um, you'll have a better sense of what they are and the history of them and why they're there. You'd be able to talk with young children about exogenous shocks. Come on, gather around, children. Let's let's talk. I'm going to tell you a story about an exogenous shocks to the oil and what will happen to gasoline prices. Um, you know, that kind of thing. And you just there's just fascinating stories of how it all went down from day one, where you know where oil even the word came from. Like it's not oil, it's petroleum, right? So where did oil come from? They called it rock oil. It was bubbling out of the ground in places like Pennsylvania, right? Um, or you know, bubbling out of the ground in Baku. So you know, you have to just all these things like you know, like put it this way, I'd like to vacation in Azerbaijan. I asked my mom, or my mom, I asked my wife, I'm like, hey, we should go to Azerbaijan. She's like, I don't want to go to Azerbaijan. I'm like, Baku's awesome. Baku's an amazing place. It's been a tourist trap since the pharaohs. Pharaohs would journey there. Just you know, no, I don't want to go to Azerbaijan. Well, you're missing out. Yeah, no, I'd love to go to Azerbaijan. Yeah, anyways. So, yeah, is it going to help reading those books? Will it help you pick oil prices? No. But if you're going to be an expert one day and you're going to sit down with someone with millions and millions and tens of millions or hundreds of millions to invest, you'll be wicked, awesome, smart, and impressive. And they may just invest in you. All right. Yeah, petroleum. Yeah, rock oil. Aussie Kiwi daily or weekly? Really? All right. There's something I haven't done. All right. I don't think I don't look at it. I don't even have a chart for it. That's how much I care. All right. So no, I can't do that one. Sorry. Aussie Kiwi. I just don't trade those two together. Yeah, they're just too related. Let's look at exotics. All right. Cool here. Remember, we need to adjust the target. The target should only be support. The reason for that is monthly resistance acted as a resistance, so the target should only be monthly support. And bulls are going to buy it down here around 13. Okay. So I think what I would like to do if I were me, I think something like this would be cool, or something like this would be cool. I think by law, I'm required to try. Okay. Yeah. And that would be positive for macroeconomics. Um, I'd really just sell this to help out my brothers and sisters in South Africa. Do it for them. Blame it on the rain. Okay, Euro's getting killing Turkish lira there. This is peso. How come I don't have dollar? So let's look at that. Where's my dollar lira? Let's put that. Okay. Ooh, look how overbought that was. Holy smokes. So how would you recommend I treat this one? Come on. What do you think of that? All right, so yeah, so we have a question here. Jacques, Jacques, do you trade ginormous lot sizes? Okay. Well, then you should, I can tell you, but I would rather you do some research. Okay. You should know the interest rate of various countries around the world, especially the G10. Okay. So whatever currency you're buying, well, no, we should, yeah. Well, yeah. Okay. So whatever currency you're buying is going to, now you own that investment, right? And it will pay you an interest rate according to the interest rate of that country. But remember, there's two pairs involved. So you're also borrowing. And that borrowing that money has a cost, a carrying cost. Okay? So it doesn't matter what currency pair, USD, Turkish lira, you just pick anything. Every one of these. So if I'm selling pound yen, then what I'm doing is I'm borrowing British pound, borrowing it. So I have to pay the great British people interest rate for borrowing their money. And then I'm converting that into Japanese yen so I can own Japanese yen. Okay, so I own Japanese yen. Am I going to make money on the swap or am I going to lose money on the swap? I'm borrowing Great British Pound to buy Japanese yen. What's the, right? Or if I, how about this? I'm going to short New Zealand dollar Swiss franc currency pair. Okay, so I'm going to borrow New Zealand dollar, and then I'm going to take that money that I've borrowed. So I've taken out a loan. Okay, I've had to convert my US dollars and borrow or use that as collateral to take out a loan in New Zealand dollar currency. So I have a loan now. I owe New Zealand money on that loan. And then I'm going to take that asset and I'm going to convert that into Swiss franc. Okay? So now I own Swiss franc, but I also owe New Zealand. Okay. What's the interest rate in New Zealand? Okay, so I'm going to owe them money. That's my cost. That's my cost of my loan. Okay. But now I own Swiss franc. How much are the good people, how much money or what interest rate are the good people of Switzerland going to offer me for their Swiss franc? What's the interest rate there? Right? So here's the situation. Only a fool would be short New Zealand dollar, Swiss franc currency pair for long periods of time because you're going to have to borrow money for the Kiwi and then pay Switzerland money for the right to own their currency. You have to pay Switzerland to loan them money? You're loaning money Switzerland, and they're like, well, you're going to have to pay us money for the money you're loaning us. You're going to have to pay us the right. That doesn't sound good, right? But you could reverse this thing. If you went long New Zealand dollar versus Swiss franc. Now you're borrowing Swiss franc, and they're paying you money to borrow. They're paying you money to borrow their money. They pay you to take out a loan. It's like you taking out a mortgage, and you go to the bank, and you're like, hey, I would like to borrow $1 million. And they look at you and they're like, well, we can only pay you $50,000 on top of that per year. And you're like, what? Like, here's the $1 million. And at the end of every year, we'll give you another $50,000 that you can just keep. Thank you for borrowing our money. And you're like, you're going to pay me? You're going to pay me to take a mortgage? You pay me? And you're like, yeah. Did we get this wrong? We're a new bank. Maybe your model, right? So anyways, you're like, wow, this banker doesn't get it. So anyways, that's how Switzerland works. If you borrow their money, they will pay you to borrow their money. Cool. Then you take that. Now you have all this cash, right? The Swiss francs. And then you convert that into New Zealand dollars. So now you lend it to the good people of New Zealand. And they say, thank you. We appreciate you loaning us money. We will pay you 1.75% interest on top of your money. And you're like, that's awesome, because I just went to Switzerland and they're paying me to borrow their money, so I'll give it to you, and you pay me, and Switzerland will pay me, and I'm like, boom, double dipping. Okay? Now, let's be completely transparent here. Brokers make money on swaps. It's very expensive to run a brokerage firm. And if you have lots and lots of retail traders trading mini lots, there's no money in it. Barely covers, I mean, it doesn't even pay the lights. I mean, so when you have many thousands of retail clients, very often you adjust the spreads so that, as an aggregate, the broker can make some money on these different spreads and such, right? To offset the fact that you're paying for servers and staff and all this kind of stuff, and you're making 4 cents a trade, right? So they also make some money on these spreads when it comes down to the small retail account. I mean, you can't be upset about that. It's a way to offer you the high quality service that you demand, even though you only have $5,000 in the account, right? Now, if you're a bigger trader and you have more money, you can ask the broker, you can negotiate even, and say, look, I'm going to drop 500K, or I'm going to drop 5M into this account, but the swaps are important to me. I need the full spread. I need to get paid on Switzerland, and I need to get paid on New Zealand, but I'll drop the 5M into this account. You'd have no problem. A broker would be happy to do that for you, because now the spread is more than enough, right? The spread pays for the lights because it's actual decent sized money, right? So just double check everything, because if you're a small retail account, the swaps are not going to be perfect, because let's also be honest, most retail currency traders, they're not interested in the swap. You're like, look, dude, I make 3 cents a day on the swap. Nobody cares, right? Most retail traders are in and out of a trade within 15 minutes. So you didn't earn a swap. All right. But one day, if you start to get better at swing trading and carry trading, and your assets under management grow from $530 to $530,000, then yeah, then it could become a bigger part of your trading career. Sure, Barry. Jacques, just go to tradersway.com and click on look on the link there. They offer swap information. Okay. Oh. You know, yeah. And the other thing is, if you do have big money, maybe you can hire me as a consultant. I'll teach you how to do it. Oh, right. So there's some exotics. The peso. How do you feel about this one moving? It didn't present a good move at the beginning of the month, and then it hit it in the middle of the month, so to speak, not quite the middle, but it did offer the counter trend trade. But I don't think that's how I want to make my career. Counter trending the trend that's already counter to the trend I would like. That's the counter trend trade, right? I have that as an option. The anti-counter trend. The counter. I like counter trend. You're like, wait, that is the trend. Well, but it's not the trend I want, so it's the counter trend trade. So there is that if you wanted to trade it. I just my trade is a flow trade, not a fundamental trade. So meh. And let's do WTI. Okay, if you're a buyer, I don't think that's complicated. Okay, and if it drops below that, I don't mind being long at 70, so I might put a bigger stop on this. Let's just check the smaller time frames here. La 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 la. Seems bearish on the smaller time frames, doesn't it? Significant drop into support, failure to rally, so lower high at M3, drop down M2. So if you actually think this is bearish, this is the perfect place on it as a day trade to sell. So now I would drop into a 15-minute chart. Ooh la la. Okay. You could definitely treat that as resistance. Okay. You can see down in here, just below 70, some nice support. So I'd like to sort of sell it at this 71-ish area and buy it back at 70-ish, really. Yeah, I got floors going in, custom cabinets going in today. I picked up the marble. Got the marble on Friday. It's nice. All right. Time is it? 30. So let's go through the calendar and then call it a day. Let me, I got the thing over here. Roger, up. I flipped a coin. All right, calendar. It's good enough, Roger. Honestly, it's good enough. If I flipped a coin and said up, I buy its support. So if there's no support today, I don't buy it. What if there's support tomorrow? Then I'll buy it tomorrow. John, that calendar sucks. What are you talking about? Thanks, John. Yeah, thanks for the loyalty, huh? These webinars get put on for you every single day for free, and you want to promote some other website? That sounds right. I'm only half messing with you, and there is truth in it, but anyways. All right, let's do this. La, la, la. Let's just only put the biggies. Well, you know what? No, I'm not. I'll leave it at this. I am going to have to zoom in. It's not that I have to so that I can read it. I'm doing it for you. I'm zooming in for you. It's not that I need it. All right. What do you think? RBA news, boom, 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 boom. Yeah, it's okay, Johnny, but just, you know, just be polite, that's all. Okay, so we got the RZ news, and then the industrial production, retail sales, all that kind of out of China. Very, 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 very cool. So the Aussie and the Kiwi are likely to move in the next 24 hours. We saw them underpriced. Right? I mean, that's cool, right? Think of it. We saw Aussie and Kiwi kind of lagging, if you will. Maybe there's a catalyst going on. Do you think Chinese business activity and inflation could be important to Aussie? So, for example, high retail sales, high industrial production, it's going to demand commodities to feed the fuel of Chinese expansion. The two major exports of Australia are iron ore and coal, as you know, the two major ingredients to making steel, so on and so forth. Could be very interesting. All right, so there's your Aussie stuff in the next 24 hours. Hopefully making some money on a new move. It also is very big in gold, not as a size of export, like not as tonnage, obviously, but as a percentage of GDP. Okay, but John, if gold fell by 50% in price, but you know the amount of gold that is being produced by Australia is the same, it becomes a significantly less amount per GDP, and it's just the gold is expensive. Iron ore and coal is cheap, but they have lots of it. Also, the interesting thing about Australia is they have the most beautiful coal ever. If you're a coal buff, you're like, ooh, look at that Australian coal. You're like, oh, look at this coal. This is beautiful coal. It's gorgeous coal. The coal in China is nasty, even for coal standards. You're like, oh. So if you need some clean coal, or if China needs clean coal, they're going to get it from Australia. So anyways, GDP out of Eurozone. Well, actually, this is German GDP, so that's going to be important because they are the leaders of Europe. They have activity. They're also, they're a major exporter. Major exporter. Oh, going back to John's comment, I believe South Africa is the world's largest gold producer. I believe China and the United States are the largest gold producers in the world. Canada is very high. South Africa is high. But see, you have to get through, like, if you're talking tonnage, Russia, the United States, China, they're way bigger gold producers. But if you're talking about, value to their GDP, well, South Africa doesn't have GDP. So some guy like picks up a bar of gold, you're like, boom, GDP just went up. And then he puts it down on the ground. GDP just fell. Look, GDP went up again, right? It's just South Africa during the crash was really interesting situation where gold fell by 50%, right? And inflation in South Africa fell by like 40%, or even worse. No, it was like 60%, right? Just South Africa collapsed. But because they sell the gold for dollars and not rand, the exchange rate was favorable. So even though gold collapsed in price, it was more profitable at, what, I forget what it was, like at $1,200, South Africa was more profitable per ounce than when it was almost $2,000 an ounce. But it was because of the exchange rate. The dollar got strong, the South African rand got super weak, and the gold mines were pulling the gold out of the ground and paying people rand, which isn't even real money, right? You're like, hey, here's some rand. Thanks for digging it out of the ground. But then they went and sold it for dollars, which were hugely valuable. And so even though gold had collapsed almost, 40, almost 50%, the South African gold mines were more profitable than ever. It was awesome. And that's the foreign exchange for you. Yeah, it was totally fascinating. Because remember, when the global economy collapsed, the US dollar was ripper strong, right? So, right? And then so it's like almost literally paying your employees with chicken feed. Right? So, and South Africans know it too. They're like, rand. I actually saw people in South Africa laughing at their currency. It just, it hits you. That's why you need to travel. People need to travel, especially as currency traders, to get to these economies. Right? The other example of something similar to that, the travel idea as a currency trader. I used to be really bullish on euro. I thought that it was a great idea, and that it could take everything that the United States did well and tweak it, add some European ideas to it, and maybe even make it better. Then I go to Europe and I hang out with a bunch of European currency traders. Spanish guy, French guy, German guy, typical, Dutch guy, right? Great. And they're like, this ain't gonna work. It's stupid. Like, what do you mean? This is like back in 2007. I'm like, what do you mean? I love the euro. Euro's awesome. They're like, it ain't gonna work. It's a dumb idea to begin with. It's just totally flawed. But it's just the fact that we hate each other. You guys hate each other? Yeah, we hate each other. This guy's French and this guy over here is German. Of course I hate them. I'm Dutch. Why the hell would I like this French guy and this German guy? And the Spaniard? Oy vey, right? Like, I even forgot to him. Well, why is he still here? Yeah. And then you realize, oh my God, if the Europeans hate it, how's it ever going to work? Yeah. Oh, you're Dutch, Robert? Yeah. Anyways, those are my funny stories. One book maybe I should read now. I feel really odd because my last day of school was on Friday, and I don't have class for 6 weeks. I'm like, I have nothing to read. I should be reading something. I feel weird not reading something. But there's an old book called Adventure Capitalist. It's about what's that guy named? The commodity guy that made his billions in commodities betting on China. And he bet on some African, like Botswana. He put a lot of money into Botswana. Jim Rogers, thank you. So his story is he got himself a hot little car and a hot little wife, and both custom made, and they traveled the world, like through everything. China when you couldn't travel through China, Africa, like places you shouldn't be traveling through, and he just, Russia. He's like, never put a penny into Russia, never. He's like, never invest in Russia. So anyways, um, so maybe I should read that book. But that's how we learn how to do commodity trading, right? I think he used to work for George Soros, right? So he's done with George Soros at the Quantum Fund. So he's like, oh, I guess I'll do commodities or whatever. He took time off, traveled the entire world for like 2 years, like literally drove the whole planet and came back and he's like, commodities. Made his billions again. And then I did read one of his books. He had his first child when he was 70. Yeah, do the math on that. When he was 70 or 72, he got married to a pretty little wife for the fourth time, I think, and had a kid, had two girls. Like, dude, a little late in life, right? But he wrote a book. I can't remember it. I didn't see it up there, but I bought it. Maybe I got the audio book is probably what it was. But he wrote a book to his two young daughters, his advice on how to succeed in life. It's very interesting. Things like be able to calculate simple math quickly in your head. Because he said you're going to see all kinds of presentations, really smart people putting Excel spreadsheets up on the slide, and you should be able to go, that doesn't make any sense. And he said most people just sit there glazing, like, ooh, that's a lot of numbers. Ooh, I don't like numbers. Math, I don't like math. And so they put up spreadsheets, and you're like, well, if the accountant says so, well, if the finance guy says so. And he says they're almost always wrong, almost always. So you should be able to look at that and go, that doesn't make any sense. Like, look at it. Like, this doesn't even add up. So become very, very, very good at simple math and be able to do it in your head like that. Like, wow, that's actually very practical advice, right? So you'll have to Google that. I think I had the audio book, but maybe I'll read as a adventure capitalist one. That might be interesting. I just need to put myself on a beach. But here's my problem now. If I'm on a beach, sitting in the shade and the beautiful beach, and I'm going to be drinking cocktails, and then I start to read a book, I won't get through the first page. I'll be asleep. Like typical currency trader. So, anyways, building permits, yeah. PPI, Kiwi, okay. More Aussie news, okay. Do we care about Euro? Yeah, okay. Well, let's go back. The Euro CPI, it's going to miss by how much? If it's right. So if it misses, this is going to be a big deal because we're worried about it missing. So if it is a low number, people are going to panic. Okay? Because remember, QE is supposed to run off this year. And if you have falling inflation, like disinflation, they're like, well, maybe we need QE still, right? So that's going to be a big deal. But if the number is high, people will say, oh my gosh, thank goodness, right? So actually, this is going to be much bigger than normal. This year, the CPI one's going to be huge. Then flip over to the Aussie stuff. Okay. Philly Fed doesn't matter. Jobless claims doesn't matter. Japanese CPI, they don't have inflation, doesn't matter. CAD news, okay, CPI, yeah, is the how are they doing now that oil prices are up? Remember, we didn't like it. Canada wasn't doing good when oil was at 40 and $50 a barrel. We're at 70 on our way to 100, right? So how's Canada doing? Could be very, very, very interesting, right? So Friday is all about CAD. So I think this is going to be a really, really good trading week. What do you think? See, Mester's a lady. Ms. Mister, do you have to read news to be profitable? Do you have to read it? Well, do you mean trade it? So let's talk about that. Do you have to? It's not the news per se. So you could skip all those news events if you wanted to. Okay? The individual news doesn't matter. The trend in news, each individual piece of news will have its own trend. ISM manufacturing, ISM services, PPI, CPI, PCE, GDP, they all have their own trends. They each measure different parts of the economy. This information is used by a central bank to manage the economy. The economy is slowing down, that is, Y is below Y bar, right? Growth or productivity is below its potential, then the central bank needs to know. And once the central bank needs to know, or once they know, then they can change policy, let's say monetary policy, to put the economy in the direction they would like to put it. Okay. So do you need this week's RBA meeting minutes? I suppose not, but I couldn't imagine why you would avoid it. When you learn to understand that these individual events don't actually matter, but it's the trend and the central bank's response to that trend that creates movement in the markets. If you're going to be a professional trader, you don't need the news events. News is not fundamentals. News is news. They're risk events. Fundamental analysis is required if you're going to be a professional. Now you'll hear a lot, well, oh, well, you know, if you're a scalper, you don't need it. It's true, but you'll also never be a professional. So the news not required, but the fundamental analysis and central banking policy is a requirement. Okay. So do you need to know the difference between CPI and PCE? Almost nobody in this room understands the difference. I've seen the math, but even then, I looked at the math and like, I don't get it. They're both baskets. Well, but the math is different on the baskets. Okay, great. So does that matter? No. Should you know what CPI is? Yeah. Why? Well, it's an inflation measure. Well, why is that important? CPI is important? No, CPI is not important. You can get rid of CPI because the Fed uses PCE. So we could just use PCE. Does PCE matter? Not really. One event in PCE or two events in PCE. What matters is the Fed is watching PCE. The Fed has a mandate, right? Productivity and employment. And if there's something wrong with PCE, the Fed's going to do something. And if you don't understand what that is and you don't see it coming, you are going to lose a huge pile of cash. Okay? None of this stuff is surprising. And for many of you in this room, you've seen me predict things 3 months, 6 months, 9 months, 12 months in advance, sometimes 2 years in advance. But we talk about these things because it's not a mystery. Central banks actually are transparent. They do tell you what they're doing, and you have the access to the same information that they do. So again, do you need to watch news or read news? No, but you do need to understand fundamental analysis. You do need to know central banking policy. What does a central bank do? What information do they look at? And when the information is too good or very bad, what course of action will the central bank take? And then, of course, how to turn that into profits on your side. Yeah, you totally have to know that, in my opinion. Yeah, no, I've been preaching that for years and years and years and years and years and years and years. You should have a healthy understanding of both technical and fundamental analysis, and you should get really, really good at multiple strategies using technical analysis. You should be competent, uh, on the 1 minute chart, the 5 minute chart, the 15-minute chart, the 1 hour chart, the 4 hour chart, the daily chart. You should be good at daily pivots, weekly pivots, monthly pivots. You should understand the importance of news events because individual news events are important when it comes to sentiment. So, was that CPI good or bad? Well, that's a silly question because it's just CPI, it's just a measure, right? But good or bad relative to what the sentiment was by the market, right? That can move it, but does that change things on the long run trend? No. What does create or change the long run trend? Well, monetary policy, conducted by the central bank. Or you could argue fiscal, run by the governments, but they seem to be hopeless no matter what government you're talking about. So it comes down to monetary policy. So if you're going to be a foreign exchange trader, you just have to know that. You just do. And you should love it. You should love talking about central banking policy, right? Right? When is the Fed going to stop paying interest on RR? And if so, what's going to happen to, right, ER? And how will that change the value of the US dollar? These are really awesome questions to be asking. And if you understand what I'm talking about, on the long run, you'll probably make a lot of money. Jacques, that's what an amateur would say and think. So, yeah. So whoever said that, they're probably right. They don't understand. And so they're going to convince you as much as they possibly can that it doesn't matter. But they are wrong. I hope you fully appreciate that. Like, I'm a professional currency trader, but all this central banking stuff is hocus pocus, mumbo jumbo. It's ridiculous to even say that. It's just like a gaping hole in someone's forehead. Yeah. Yeah, I know you would, but like, who would give you that kind of advice? Oh yeah, you should be a professional, but just skip all that fundamental mumbo jumbo. I mean, it's retarded, actually. I mean, let's just throw the cards on the table. Only a moron would give you that kind of advice. That's so stupid, right? It's like wanting to build bridges, but don't do the math because the math is mumbo jumbo. It's like, yeah. By the way, just as I wrap up, this weekend was the state championship for Science Olympiad again here in Georgia. Last year, my son was the state champion for engineering bridges. 270 schools participate, right? So this year, my son is, boom, 2 years in a row, the state champion, right? The state champion for bridge building, which is an amazing feat, like unbelievable. It's just the odds are like zero, right? To be able to do that once, but twice is ridiculous. I'm the coach, by the way, of the bridge building team, so I am two-time coaching state champion. But my daughter is the state champion at building and launching rockets. 270 schools. We get there. The average is 8 seconds, right? Third place was 19 seconds. Second place was 34 seconds, and she was first place at 36 seconds. 36 seconds. Third place was 19. There was 270 schools. Boom, my wife was the coach of the rocket building team. So she's a champion coach. So anyways, we're feeling pretty good about ourselves, which means I'm going to go eat some humble pie for breakfast, keep everything in check. But it it's ridiculous. That's not an easy thing. I mean, that is not an easy thing. So my son and daughter are state champions. Just crazy. So yeah, we had a very interesting weekend. Then I bribed the judges. Yeah, I don't even know who they are. So anyways, so that's pretty cool. We're pretty proud. And the kids are like, yeah, well, we always go to state, you know. Oh, look, I'm champion. Yeah, I was a champion last year. Like, dude, I had to tell my son, I'm patting him on the chest. I'm like, dude, this matters. This is a big thing. This gets you into MIT. And he's like, yeah, well, you know, I won. You know, of course. Like, yeah, we need bigger challenges. We need a bigger state. So, anyways, apparently, if you ain't first, you're last, right? So, I don't know. I don't teach that though. I teach. I have a shirt actually. It says when you read it, it says "act like a champion," but in faded letters, it says "practice like a champion." You know, the act is, anyways. So, peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Yeah, cool. Thank you guys for being on my team. I do appreciate you very much. And I thank you for being a client to Traders Way. That's also important. So thank you for doing that. We appreciate the loyalty and respect that you show every day. We hope that you're super successful. See you tomorrow.